Hello, hello, hello. Welcome to Al Stock Trades. All right, ladies and gentlemen, in today's video, we're going to go ahead and talk about some data. So we went ahead, gave my thoughts, my opinions. Now today, let's talk about data. So economic indicators, February core PCE, and consumer inflation expectations. So in this video, we're going to talk about how we are bullish for stocks, and we're going to give you some important pieces of information. We do believe we are going to be rallying tomorrow. We already have started to see it on the futures. Again, this is not a coincidence. There is a rally, and Wall Street is moving their money. In fact, Wall Street since Friday has been moving their money because of a key report that has been given on Friday. So we're going to go ahead and show you guys what that is, just in case if you didn't catch it. So overall, core PCE price index announcement for February was announced at 8:30 in the morning on Friday, of course, right? Revealing a month-over-month increase of 0.26%, which was slightly below the 0.29% anticipated by analysts. Again, this is a core PCE. We want it to rise slowly. This outcome supports the Federal Reserve belief that inflationary pressures are subsiding, potentially more rapidly than the market had anticipated. Hence why the market is rallying right now in the pre-market for the futures. The downward trend in inflation aligns with the Federal Reserve's less aggressive stance on monetary policy. Chairman Powell and the Federal Reserve's interpretation of the data could lead to a more accommodative policy stance, which is a positive signal for equity markets, hence why we're rallying. Given the favorable core PCE figures, a positive response from the stock market is anticipated when it opens on Monday. So we do believe tomorrow is going to be a green day. This sentiment is bolstered by the University of Michigan's final consumer inflation expectation for March, which saw both the 1 and 5 year expectation decrease to 2.9 and 2.8% respectively. So the drop in consumer inflation expectations situates them below the 20-year average prior to the pandemic. This further validates the Federal Reserve's shift towards a more accommodative policy stance, suggesting a rapid decline in inflation pressures and is seen as a bullish sign for the stock market. Like I told you, there are many onions that need to be basically examined and removed. The first onion is the destruction of inflation, which we are seeing before our eyes. The second is is interest rates, which will be decreasing this year, especially given these bullish data points. And again, the Federal Reserve and Federal Chairman Jerome Powell are data driven. So we can see a rally, but interestingly, we have a 0.4% rally for S&P, a 0.4% rally for Dow, and we have double of that, 0.89% for the small caps. In fact, small caps are actually outperforming right now from these preliminary pre-market readings from the future. So small caps are doing really well. They're just blasting off right now. Hello, look at that blast. This is today. Look at this blast off. This is and it's literally growing. Okay, so we're doing pretty good. A couple things I also wanted to point out to you guys with the research here is that the last time we've seen these types of gains, it doesn't happen a lot. And again, the x-axis is not by 2022, 2020. We're talking since 1962. This has only happened about 1, 2, 3, 4, 5 times. So the market, since it's been rallying like this, and if we were to look at all the times it's rallied like this, it's going to end really positive for the S&P 500 for the year 2024. In fact, for all individuals that are part of our stock terminal and mastering stock market course lifetime access, if you look at our portfolio hedging modeling system, it is doing well. It is outperforming the market. And I believe this trend should continue. Okay, so now that we went ahead and taken a look at this again, all different types of countries are also making all-time new highs. These happen during times of near bull market or the starts of bull markets. So before the market world stock market wasn't doing well, well now it is nearing all-time highs. So we are basically getting ready to start this bull market. And you know what's funny? Just like how individuals in 2021 were like, this time is different. I will sacrifice my firstborn that the stock market will continue to rise. We will always go to the moon, baby. You know, all these people were just going crazy where you felt, I think one YouTuber said this, where, you're in a bull market where you want to sell your house and sell everything just so you can double down in the stock market because you are already in it and you still feel like you're missing out. Right. And then all of a sudden now everyone's like, oh no, stocks are terrible. Get that crap away from me. Right. So we do believe the sentiment is changing. Another thing I want to point out is you remember how I told you about systems of equations? So this is the small caps IWM. And all I did was I went back to my elementary school years and I said, let me connect the dots. So I connected the dots because this connects with this, connects with that. Oh my God. And then guess what? I'm so smart. I extended the line out here, right? And then I went ahead here and I connected here. I connected this and I connected this. That's all I'm doing. I'm just connecting dots. And then I'm like, let me see where they cross. Oh, they cross right here. That's called the y-intercept. Okay, great. Then I went down and I'm like, what date is that? I'm curious. Oh, it's on June 11th. Okay, well, that's interesting. What's on June 11th? Oh, here's the FOMC meeting calendar. Oh, that's weird. There's June 11th right here. Kind of weird. What's that little asterisk? What's that little star next to it? Meeting associated with the summary of economic projections. Oh, is that when they're going to say they might have their interest rate cuts? Could it be? Could it be? Well, it very much could be. And the reason why I find this interesting is this is algos. This is algorithmic trading to set this up. And all we did is systems of equations here, just drawing lines. Mathematicians like to start smart, sound smarter than what they are. You just draw a bunch of stupid lines that you learn in elementary school. You find it connecting, and here it is. So we do believe potentially interest rates will be cut in June, potentially. And if that happens, well, you guys already know what's going to happen. They're either going to be a breakout or breakdown. Okay. All right. So now that we went ahead and pretty much talked about what I wanted to talk about, that's all I have for you guys, honestly, right? And this is pretty much it. I mean, everything's according to plan. The stock market is how you doing? Howdy, Rick. Howdy. The stock market's doing really well, and I think we are basically slowly coming out of this better than what we expected, and we are doing pretty well. So that's all I have for you guys, and I hope this video was helpful. We do believe and expect to see a rally tomorrow, and happy Easter. And I'll see you on the next one.